Today, I'm going to take you through the 12. This is March 12th, 2025. Can't believe the quarter is flying by. We are in the biggest option expiration quarter, I believe, in history. The volume in option play has been just insane, especially this week and throughout the last number of Fridays when it comes to expiration. So what I'm going to take you through is the 12. And now you're a subscriber or you're potentially considering subscribing to the 12. It's first of all $10 a month, cancel anytime. And I'm going to take you through what is the 12, how to use it, and how to benefit from what it's telling you. And then I'm going to also take you through the charts on each individual position. We're going to do a quick 1 day and one weekly view, or a daily view and a weekly view of the 12. And I'm going to give you my insight and what I'm thinking and how I'm playing it and how I'm using the 12 and its day-to-day risk range projections and how I'm using that to make money. So let's get going. All right, now if you're a subscriber, you are seeing this on a daily basis, Monday through Friday, and I every so often throw in a weekend update on this because crypto trades 24/7. The 12 is 12 of the largest market cap positions in equities and in crypto, and the highest money flow element. So it's looking at the top 7 of the S&P 500, top 7 market cap and money flow, and then the top 5 of the crypto world. And so these companies potentially can change based on where they rank in the market capitalization weighting. I tried to update that every 6 months so that I'm not flipping it every week, which in this environment could be weekly. And so we use this, I send it out every day. So I'm going to take you through it so you understand better of how this thing works. All right, so we have the top 7 highest market cap companies in the S&P 500. That's NVIDIA, Microsoft, Meta, Tesla, Apple, Amazon, and Google. That changes, and if you go back to 2000, the largest one was General Electric. Where are they today? Not in the top 7. So this list can change based on market cap weighted and the money flow that flows into these companies. So when you look at a company like NVIDIA, you have what we have is today's price, or the price as of every 20 minutes it updates in the sheets here. And at this pricing, this was at the beginning of March 12th, 2025, pre-market. Yesterday, Monday the 11th, it closed, Tuesday 11th, it closed at 108.76. We take that number and a couple of different elements of it, and we use price movement and volatility of that price movement. And that determines the low end of the range for the day. So today, the 12th at 103.71, that price is higher than it was the previous day. So we have a higher low in comparison to Tuesday. On the high side, this is the top end of the projected range, is $114.25. This is as of the close on today, March 12th, 2025. And it too is up versus the previous day, Tuesday the 11th. Now, the percentage of the stock price away from the low end, in this case, is 4.87%. And on the top end, 4.81%. Now, you're basically in the middle of the road here with this. So when it comes to using the range, there's a couple things you need to do prior to making a decision on the day-to-day element. And that's where the trade trend and intermediate trend are. The trade trend is basically 15 days of market when the equity markets are open. Now, when it comes to crypto, we do still use 15-day periods. as you can have seen in the past, I've upgraded or make tweaks to the system. I will always be doing that because I want to be better and more accurate. And so in this case, the stock price is below the trade trend, okay? And then on an intermediate trend, this is 62 days, trading days of the year. So 1/4 of the trading days of 2025, the stock price is below this. When I look at this, my first rule is I want the stock price above the intermediate trend line. I'm looking at this from a 62-day trading period. So that's a long-term, in my opinion. So I look at this and I go, NVIDIA is not a price right now, is not above the intermediate trend line, which tells me that the stock price is continuously moving downward. Second, the trade trend, so that 15-day period of time, is also below, the stock price is below that as well. So when I immediately look at this, I know from a intermediate term perspective, 62 days out and beyond, this is not a position I want to hold and be accumulating right now. Okay. So at what point, your question may be, is do I start accumulating this stock for the intermediate to long-term period of time? Well, number one, the stock price closes and confirms that close above the intermediate trend. What I mean by a confirmation, I mean it closes above the intermediate trend, it comes down the next day, supports there, and then moves back up, and maybe on the third day tests it again. If it holds the intermediate trend line, I then start accumulating. And I want to accumulate when I see higher lows and higher highs, because I know that confirmation of the intermediate trend line is upward. Okay, so right now, if you're looking at this, the intermediate trend line is negative or down for every position in the 12. And that has happened basically in the last, 10, 11 days. And that to me is saying everything, money is flowing out of equities, especially large cap companies like we see here, and it's flowing out of crypto as well. Now, how do you use this on a short-term basis, like a trade trend basis? This is when I go to the day-to-day price ranges, the low end and high end. And so today, to give you an example, I use options as my directional trading. And the way I looked at it was yesterday, we closed up basically 2% from Tuesday 11th, Monday the 10th to Tuesday the 11th. And we have a higher low and a higher high. Okay, cool. That's great. So when the market opens, I'm looking for that stock price to go towards the high end. Now, when I look at my intermediate trend, it's down. I can look at a chart, and I'll show you a chart. It's down. The trade trend is also down. So any bump towards 114 or above, I have a higher probability in my favor that stock price eventually will close lower for the day. So what do? In my case, this is not advice or recommendation. You invest and trade at your own risk level. But from a short-term standpoint, a trader standpoint, I then went and bought a put contract on NVIDIA going out 2 weeks because I want that time element to work in for me. I don't want to buy anything that closes on Friday because I get an enormous amount of theta and time decay. So I don't want to do that. So I bought my puts at the higher end of the morning, and now I'm holding them in expectation that we will fall back towards the low end of the side trend of this. For your intermediate trend players in this game or in this investing cycle, sit in cash. That's what I am doing with a lot of my portfolio is I'm sitting in cash waiting for confirmation of a trend reversal from downside to upside. I want to see if I'm buying a position for the long term, My long term is 6 to 12 months because markets move in quarterly fashion based on earnings per share and all that. So I want to use the trade when it comes to investing or long-term investing. I want to use that intermediate trend as my confirmation of now is the time to start getting into and building this position. In the short term, I'm playing this from the trade trend element. And in this case, as you can see, other than today, Ripple, which is crypto, is the only company or investment that is actually up for the day. And that can change. And you can see here, Ripple has a $2.17 low end. It has a higher low. It has a $2.80 high end. It has a higher high for the day. And pre-market, it was trading at $2.21. It is 1.7% away, price-wise, this $2.21 away from the low end of the daily range. But it's 20.99% away from the high end range. So if I'm looking at this from a trade perspective, and my trade indicator says it's up, I could get a bounce and a quick trade out of Ripple. Now, take into account crypto trades 24/7. So if you go into the evening and you're asleep, Ripple could quickly be back down towards the low end and your trade could be negative. So when I look at this, I also score this and more on an intermediate trend perspective. And I use intermediate trend perspective. If I am down, I will not invest in from a long-term standpoint, intermediate to long-term standpoint. It automatically gets a no-go, meaning I'm not going to allocate a full allocation to that position. The scoring system is 1 through 5, pretty easy to understand. And right now, as you can see, NVIDIA is a 2, but because the stock price is below the intermediate trend line, it automatically gets a minimum allocation of 1%. Now, why have anything in it? What I've learned in the last 26 years of my investment career and as a financial advisor for 21 of those is that not having a little bit in a company that you believe in fundamentally and that you believe is going to be a part of the long-term evolution of the world, you start to potentially miss out. And what I'm trying to do here with the 12 is to eliminate all that emotional side of things, because the emotions are the biggest pain in the rear for most investors. Emotions get in the way. So by having an allocation of 1%, I'm not going to most likely blow myself up in this case. You have a 12% exposure to the markets. If you're, say you allocated $100,000 was your bucket and 12%, so you got $12,000 exposure. It's not going to kill you if that stock price goes down further with just 1% exposure. Now, this is a high beta or higher risk portfolio because of the volatility of it. So when it comes to the potential upside is great, but the potential downside is great too. So I use the rule of just 1% allocation at a minimum at all times so that I'm in the game when things do turn. And in the crypto world, they turn fast. So I have exposure so that when things start clicking off in a bullish way, I can allocate to that existing position. So right now, there is nothing, really nothing to allocate other than 1%. Max allocation in any one position is 8% total. Now, as we get higher trade, or we break through the intermediate trend line and we confirm about that, this score is going to go up and you're going to get an allocation change number there. It's the same when it goes to the trend line. Allocation will go up. Now, one particular interesting thing is when you have a score of 3, and I said score of 1 out of 5, I meant 1 out of 4. When you have a score of 3, it's an 8% allocation. And what I created that for is because you have a lot more upside based on the high end, the day-to-day range than you do at 4, at a score of 4. So when it comes to allocation, when it scores a 4 or 3, it gets a 8% allocation. When it scores a 4, it goes down to 6. So if you're initially getting in at a 4, I'm taking into account that there's a chance we're going to have a pullback down to the low end, still above the intermediate trend and trade lines. So hopefully that makes it a little easier to understand. I'm using this today from a day-to-day standpoint. In this market, it's very volatile. And as you can tell, the VIX here, the volatility index, this is still a bit in beta, but I use the volatility index because it measures the volatility of the S&P 500. And recently, we're in what I call the chop bucket. And the chop bucket is between 19 and 27 on the VIX, okay? Anything below 19 is in the investable bucket. That's typically when the volatility drops and stocks start to move, are trending higher. Anything above 27 and a close above that, now you're getting into what I call the F bucket. Figure out what the F means. This is when things get really volatile. This is when pandemic, the great financial crisis, the dot-com bubble, on and on. The VIX went up to, like in the pandemic, you saw the VIX get up, I think, close to 82. This is when things blow up. So I use the volatility index to better understand where the overall sentiment of the market. And right now, it's very volatile, very choppy. And so I risk manage around that. And so that's how I use the VIX number here. Now let's just pound through a couple charts and show you what I'm seeing. All right, so this is NVIDIA daily chart. As you can see, we're below the intermediate trend line. That's in yellow. And we're below the trade line, which is in white. Our RSI is ticking up today at 43.70. That's positive, but I use the rule above 50. That's when strength is really happening. But we're still below this intermediate trend line, which tells me we're most likely going to run into some volatile situations, and we're going to continue to slide downward as we've seen over the last, well, actually, if you think about it, we started this downward or rounding of NVIDIA since May of 24. We went up, we peaked, went down, we peaked again, November of 24, tried again in January, early January, and then since then we have just trended downward. Now, my feeling is we're going to get up close to that 20 mark. We may even get it close to $130 on NVIDIA, but based on the economic conditions, money flow in general, there's really nothing in the cards that's going to drive NVIDIA to higher highs, in my opinion. So I'm being cautious here, and I'm using the 12 indicators to tell me how to trade this. And I'm talking about trade less than 15 days is my mindset with this. Let's look at Apple. Apple, similar thing. Down again today, lower lows, lower highs, below the intermediate trend, below the trade. RSI is in the tank, it's below 50. It's at 30.62, and the MACD is just negative. I don't see any, right now, I see this continuing going forward on Apple. Microsoft, to squeeze this up a little so we can see it. We're up today in Microsoft 2 days in a row. It's 11:19 Central Time on the 12th. So we're still below the trade trend. And as you can see, this stock has been following the trade trend. It'll come up, challenge it, come up, challenge it. And I would not doubt that it will go up and try to challenge it again at the trade line. But we're still below this intermediate trend line. As you can see, we hit the peak back in July of 24. And since then, we've just gone lower. So Amazon, similar thing. We are below the trade, below the intermediate. This trend continues to go downward. We have been following the intermediate or the trend line since, February 7th is just gone south. chances are we'll have a challenge of the intermediate trend, or excuse me, trade trend line. RSI sits at 34.80. It's up today, but it's still below 50. Still doesn't give me a lot of confidence, and the MACD still is trending negative. Meta. This has really stayed above for a while, a long time, much longer than the other positions in the 12 above the intermediate trend, but it did break through it on March 6th and has traded below that. We're coming, the trade line is trending south, still, pardon me, still above the intermediate trend line, but is sloping downward. So I expect that Amazon, or excuse me, Meta will try to breach that intermediate trend again. Wait for confirmation that the trend, if it does break that, that's confirmation. That's typically 2 days, and then the third day it takes off and starts moving higher. That's when I would consider starting to build my position in it. But right now, it's telling me no. From a trade perspective, what I would potentially, from a short-term trade perspective, is if we got close to the intermediate trend or close to the trade trend right here, I would go maybe take a short position. If you don't understand shorting, don't understand options, read up, educate yourself. You'll become a better investor by understanding it, even if you don't ever use it. And so I would take a short position as I got closer to the resistance level of the intermediate trend line. Tesla, poor Tesla, just headed south. I mean, think about it. Cars, a consumer-based company. What's the biggest challenge for consumers right now? They can't pay their credit card bills. They're struggling financially. Inflation has beaten the average consumer in the United States. I'm not talking about the top 1%, but it's beaten them up. And Tesla is a car company. You buy cars. You consume it when you have money and it's affordable. Well, Tesla has been on a downtrend since December 18th. It broke the trade trend, went above it, broke it again. It then eventually broke the February 5th. It broke the intermediate trend. And since then, it has followed the trade trend all the way down. I would not doubt that we get towards the trade trend again, right around today, if it went straight there, it would be 181. Chances are it'd probably be right around 162, and then I suspect it possibly would reverse. Remember, what would drive Tesla buyers to buy a car today? Why would they do it? What would be the economic condition in general would have to be for them to do that? Take that into account. RSI 3263, still below 50. The MACD continues to go lower. So we're seeing on the 12 sheet lower lows and lower highs. You may see a little bit of difference depending on where it closes today, but be cautious because we just came off a massive selling day on Monday the 10th. Take that into account as well. You get that sort of dead cat bounce kind of moving for you. Bitcoin 24/7. It trades 24/7. It's volatile. I don't think a lot of people know this, but about Bitcoin, there will be 21 million Bitcoin available once they're fully mined. Today, there is between 19 and 20 million, and basically 75% of the mined coin out there is been bought and taken off the market. So you're only trading with probably about 2 million Bitcoin and whatever else is accumulated. Now you have government, you're having states use Bitcoin as a reserve potential. That means more accumulation, which creates more volatility and less supply, more demand. It could potentially swing Bitcoin higher, but remember, this is about money flow. And right now, Bitcoin is in a negative downtrend. Pardon me. We're below the intermediate trend. We're below the trade trend. As you can see, bam, trade, bam, try it again. Oh, bam, resist, bam, keeps going down. We're at it again. Are we going to break higher? Why would this go higher? Take that into account when you look at this. Ethereum. Ethereum, similar, just it's been trending down since December 17th, broke through the intermediate trend line back on, closed below it on January 7th, and then since then has just bumped up against the trade trend. RSI at 3178, MACD is negative. This just keeps going down. You're not in the game of catching knives, falling knives out of the sky. You're just going to cut yourself up, die by 1,000, paper cuts. You don't want to do that. XRP is up, has a low end of the it had a higher low and a higher high, if I remember correctly, and definitely confirm that. Ripple had a higher low and higher high today on the range, and based on yesterday, it was up above the trend line. But as we can see here, we're still below it here, below the intermediate trend. It's just following the trade line. So be careful there. RSI 44.32, MACD is negative as well. Slow stochastic, or not slow stochastic, Solano is similar story, same verse, different, or what is it? Same story, whatever. Trade, it has been trending lower since January 26th, below the trade line, then broke below and closed below the February 2nd intermediate trend and has just basically followed the trend line downward. The RSI 3587, MACD is negative as well. Binance, this is another crypto coin that is in the top 5 holdings. When you look at the top 10 holdings or top 7 holdings of crypto, our largest market cap, I take out the stable coins. So that's Tether and the USD something. So I took those out because they're just stable coins. Binance broke through, basically started breaking down back on January, breached over the trade, over briefly for a day over the intermediate trend, but since then has followed the trend downward. RSI is at 38.31 and the MACD is down as well. Google, sorry, it's out of order. Same thing as all the other equity positions. We're negative. It gapped down from February 4th to February 5th, and broke through the trade line and then through the intermediate trend line on the 7th, and has followed the trade line down all the way to today. So what is this telling us? This is telling us that we are in a downward trending market. We are in a resetting environment. Treasury Secretary Scott Bassett was on CNBC last week. I would suggest going and checking out this interview. He basically told us that they are going to drive the U.S. 10-year Treasury yield down, meaning they're coming in and they're buying U.S. Treasury yields. You're seeing money flow out of Japan, out of European bonds, and they're flowing into U.S. Treasuries. And the yield is trending, which means the value of the bond is going up. They're driving this 10-year Treasury yield down because that is what banks lend money against. So think of your mortgage. If you have a 30-year or a 15-year mortgage or a 5-year term, they use the yield on the 10-year, and then they stack up to 3% or so on top of that, or 300 basis points on top of that, depending on credit. If you have great credit, they stack 1% on it. And if they have terrible credit, it's 3% more. In the commercial real estate, commercial loan world, they're stacking more on top of that. So if you're a commercial borrower, you've been borrowing, you borrowed back 5 years ago when 10-year Treasury was around 0.5%, stack that spread on there, you have a great interest rate, but your term was only 5 years. Guess what? It's 2025. You got to refinance that debt. Instead of financing at 10-year Treasury yield of 0.5% plus the spread, you're financing at the 10-year Treasury yield of roughly 4.25, 4.3 plus the spread. And if you have really bad, you're not really a good credit-worthy commercial lender, you're probably 9 to 12%. And then the banks stack on risk parameters or risk premiums. So maybe it's not 3%, but maybe it's 5 or 6. So you're seeing a lot of this commercial real estate come in to play and to be refinanced, as well as 5-year mortgage arms or mortgage people who need to refinance their existing mortgage or individual loans or stuff like that. So the Secretary of U.S. Treasury or the Treasury Department is trying to suppress or push down treasuries. And at some point, probably as we get into August of this year, you're going to see quantitative easing come into the market. You're going to see cheaper money being pushed in the market to create liquidity. Because right now we're having basically a reset or retraction of liquidity, and liquidity is getting tighter and harder to get. And so money is coming out of equities and going into U.S. Treasuries. It's going from risk on to risk off. And that's the environment we're in. We can see that in the 12. So take that into account. Use this as your guide to how to properly long-term invest and short-term invest. It updates daily. Thank you for subscribing, those who have subscribed to the 12. Remember, it's $10 a month. Cancel anytime. Click the link below. Please like this video. Share it with a friend. If you're interested in subscribing, click the link in the description. Go to it, learn a little bit more, and get on the 12. It's a simple way of approaching this with simple process and simple way of doing things. And most importantly, what this does for you is to allow you, as I always say, to live loud. Live the best life. Thank you for watching. Have a great one. Take care. Peace.